JB Cycle is here with an update on the Norwegian market. Once in a while I look at the Norwegian market, which is closely related to energy and oil, and for a while I've been curious about a thing here. I should say the Norwegian market is here in blue, and in red I have a composite of many cycles, and this composite was extremely bullish from around September and until around New Year. Well, we could zoom out and see this cycle composite a bit longer term. So you see we have this very bullish phase extending into, well, around January, February, going sideways this winter and spring, and then it turns down. And we had this is mainly the main cause of this is the 7-year cycle, but there are also many other cycles being very bullish right now this fall. We go back, we see we had a similar cycle composite around 2017, 18, and around 2010, around the QE2. So I've been curious, how would the Norwegian market react to such a very bullish cycle configuration? Well, we should rally strongly. And also I speculated that the oil price should pop up. But it really didn't turn out that way. So, this has been sabotaged, this rally, with a correction here in, when was that? October, November, and now we are currently in another correction. So we can't find momentum, we cannot break out, although the cycles favor some kind of a breakout here, the Norwegian market can't do it. So, I've been kind of wrong about my assumptions. The cycle, the 3.5-year cycle, is still bullish for the Norwegian market until into January, February sometime. We see we never got really oversold here in 2022, 2023. So because of the strong energy market, the Norwegian index stayed mostly sideways in the previous bear market, and now we cannot find momentum here. But I would still think we should not start crashing down here. I think still we have some weeks or months left of this bull market. Also, I have an average of some analogs, and it looks very similar. This is based on more like call it a pattern recognition based on wavelets, and again very similar to the previous one, and looks like we should still expect the bull market to go on for maybe another month or two. So now let's have a look at the hourly data. So here is a very common I don't call this a cycle, I call it an oscillation, and it's of about 6 weeks or something like that. I cannot remember, 30 or 35 trading days, around that. It may vary in length. So right now we are here in green, and we have this bearish scenario in red and the two more bullish ones up here. But we see this current oscillation in green is closely following this red scenario. Now, I have very often seen the market being satisfied with a low at this point. Although the scenario still is going down for another 5 trading days, that does not always materialize. It can materialize, and we could even go on for another couple more days than that. But we're in a very dangerous position here. We have broken this previous low, so we could definitely have a flush down here. So because of many holidays, we have a bearish bias here into the first week of January. So we'll have to see, but we are approaching a low here. The question is, do we get a flush down below this previous low? Will this trigger some stop loss, and then we just flush down here. Also, we have this is the Norwegian market hourly data since 2019. So I should go up here. This is a typical, also what I call an oscillation and not a cycle. We see the oscillation is this big one, and it's made up of smaller fractions. And we see we are now halfway, and we are making a low here. We see this previous low was probably this low, a bit shifted, but now we are at this point. And I think you could call this a scenario or an average of a typical oscillation, and we are at the point where we should expect a low, and I think this bull market could maybe top out at this next top, and that would bring us to around February, March, a time that I will be talking a lot about, or I have mentioned it often in my videos. So that something like this would look like something like this. So I think it doesn't look right that we should just crash down here. I think we still have another try to the upside here before we crash down. And the difficult thing, what I think is the most difficult thing about cycles, the 3.5-year cycle is not that difficult. It's very reliable and very short term. We had the 4-week cycle and the 2-week oscillation. They are also very good, but the problematic thing is the cycles of length around 10 to 40 weeks. I always had trouble in understanding them, but so let me show you a couple of ones. This is the double 17-week cycle, so it's the 34-week cycle for the Norwegian markets. We see we are making lows here, and this cycle has a top around February. I think it's too early to crash down here. We should have another pop up here, and then we have this one is of about 102, 103 calendar days, and again we are at the expected cycle low. So I'm seeing a lot of stuff here suggesting we are very close to some kind of a low. We shouldn't just crash down from here. We should expect another pop-up, another uptrend, another upswing into, say, February, March, and I think that could be the bull market top. But we'll see. To admit, I've been wrong about my assumptions for this fall for the Norwegian market and the oil price. So I could be wrong again, but I think it's still a little bit too early to go into a bear market. So, see you in the next video.